Well, hi everyone, and today Buffett and Beyond Research brings you the top stocks in the Semiconductor ETF, which are up 54%. Folks, we love this market. And this picture right here, if you want to be on this beach like Jimmy Buffett used to walk on, you've got to learn how to invest even better than Warren Buffett does today. And folks, this is sunrise on the Atlantic Ocean. I've never seen one more beautiful than this. Let's get right into it. All right, let's go over the technology ETF, which we went over last week. And this chart is from last week, and you can see we got a beautiful, nice divergence buy signal in here, and this market started going up, and this is from the week before, actually. So 2 weeks ago is when we got this signal, and we got a nice rally going up to the 50-day moving average. We got a buy signal down here. Let's look up that today, or I should say this is Friday. It went up. So the XLK, which is the technology ETF, went up above its 50-day moving average. And today, Friday, as I'm recording this just before the market closed, we are getting a test of that 50-day moving average. So the market is saying, hey, you got to prove yourself right here, buddy. And we'll see if it happens. We won't know till Monday or Tuesday. Now, let's look at the Semiconductor ETF, and this is as of Friday the 13th, which was just yesterday, folks. And we are seeing, here's the 50-day moving average, here's the 200-day moving average, and this ETF is below both of those. And we don't like to see that, because if this 50-day crosses over the 200-day, we have what is called a death cross, and folks, we don't want to see that on any of our indicators. But now look at what's going on here, and we're going to see in a minute how good the top picks in our ETF are, because we use the clean surplus methodology in order to pick those stocks. And let's take a look. So we're going over now. Here are the stocks, the top 6 stocks that we have in the Semiconductor ETF. So with the Semiconductor ETF up only about 12%, a little bit less than the S&P 500, the top stocks that we picked are up 54.5%. And folks, if you want to hedge this portfolio, and we have shown in the past that the worst year that we've had, and we're going to show that slide in a second, worst year we had was down 5%. So if you want to be long and short, so in other words, hedge, take these stocks, and we know how to hedge them, and we show you that in our daily letters, you would be up 41.5%. All right, the S&P is up 13%. Our long, short, our hedged portfolio is up 41%. And if you don't want to be hedged and just buy the stocks outright, you'd be up 54%. Now, folks, look at this S&P 500 right now. As I'm recording this, up 13%. You've got to understand that 96% of professional money managers who manage the publicly traded mutual funds, 96% of them cannot outperform the S&P 500 over any 10-year rolling period. And that's a Morningstar report out of 2002, and we follow that all the time, folks, and they are 100% correct. So when you can develop a portfolio that's going to outperform the S&P 500 by 4 times, so in other words, if you just bought those long stops, you'd be up more than 4 times the S&P, which 96% of money managers cannot outperform. Or if you were hedged, you'd be up 41%, almost 4 times the S&P 500. Now, let us look at the utilities. Now, we looked at the utilities last week, and this chart is from last week, and it looked like we were forming a little bottom down here, testing this, because you see these long legs on these candlesticks here. So it went down to test twice, and we got sort of a little buy signal. Now, here we are as of Friday the 13th, and here's those 2 tests right there, and we got a rally. Why? Because interest rates went down, and thus the utility stocks went up. Point I want to bring out is it's very hard to do this type of timing and get in right in here. Now the key is, do you get out right in here? And this is why a buy and hold, but with hedging, works out so well. And if you look at the XLU over 5 years, the black line is the S&P 500. XLU is this mustard-colored line. And folks, with the S&P up about 50%, the XLU, which is the Utilities ETF, is up only about 5%. So the market is 10 times stronger over the past 5 years than the utility index. And that's supposed to be a defensive type of ETF. Over 10 years, yeah, the market up 150%. This utility ETF is up 50%, so the market beats it by 3 times. But let's bring everything up to today. We like to take 5 or 6 ETFs, and then we pick the best 5 or 6 stocks in each ETF, and we hedge them or we don't hedge them. Some of you don't care to be hedged, others do. So when we're looking at the market up 13.1%, so this is for 2023, this year, and we're a little bit more than 3/4 of the way through this year. Our hedged portfolio is up 17%, better than the S&P 500. And if you didn't want to hedge, you'd be up 33% by picking the top 5 or 6 stocks, which we do for you, up in these 6 ETFs that we follow. And we're looking at the technology ETF, semiconductors, transportation, the healthcare, the home builders, and the home construction. So we have all those ETFs, and we have the best stocks in all those ETFs. Again, S&P up 13%, our hedged portfolio up 17%. This is for 2023. And if you didn't want to hedge, you'd be up 33.7%. Now, let's look at the past almost 5 years, because 2023 is not over yet. If you just had the top 5 or 6 stocks in each of those ETFs, you would have had a drawdown of 27.9%, which is pretty hard to take. But if you were hedged, the most you would have lost was 5.1%, and that is 2022. That was last year. And folks, the S&P was down 19.6%. The NASDAQ was down 34%. So if you were long and short in our hedge portfolio, down just 5.1%. So folks, the total here is up. If you had all these up, you would be up 76%. What is the S&P up? The S&P would be up 60%, but you would have had a drawdown of 19.6%, where our drawdown was only 5.1%. So folks, buy and hold is good, and if you're hedged, it's even better. And there's your risk right there, folks. And look at the returns that you had in these other years. So, folks, we've had a tough week this week. It was good with interest rates dropping. Friday was a little bit tough, but we have buy signals going on. Our semiconductor ETF is really testing its mettle there. But, folks, we're up over 50% in the semiconductor ETF. Even though the chart doesn't look good, we're doing extremely well, 4 times better than the S&P 500. So, folks, if you want to live on this beach like Jimmy Buffett used to, you've got to learn how to invest even better than Warren Buffett does now. All right, folks, have a good weekend. We'll see you back here on Monday.